Hello and welcome to Money, Money, Money. You might be wondering what we are doing out of the studio. Well, we've come down to Chayos for a little bit of Chai Pe Charcha. About what? Well, your investments. Demonetization is changing everything around. So is it time to churn your mutual fund portfolio? What sort of funds should you keep in mind? And what does this mean for your wealth at large? Well, joining me to answer all of those questions today is Mr. A Balasubramanian. He's the CEO of Birla Sun Life Asset Management Company. So it's a pleasure to have you here. And I understand that we've managed to drag you out of your office in your busy schedule. So really appreciate this.
No, pleasure.
But people are confused out there. They're hearing the headlines. They're watching the market, which has slipped since the 8th of November, and they're wondering whether my wealth is getting eroded. What would you say?
See, it's not the question of wealth is getting eroded. This is probably, I would say, is a new normal. The demonetization, as widely spoken about across the country, it is good as well as it is bad in the short term. And it is good in the long term because the savings which otherwise was not earning anything for you. It is lying either in the cupboard or is not actually getting accounted and so on and so forth. That actual money is coming to the banking systems. So therefore, the savings rates are going to go up. Therefore, for next 2 to 3 quarters, probably, we will see actually in general, the kind of growth that we have seen in all these years may probably be slowing down.
The GDP growth.
The GDP, as well as the consumer behavior and so on and so forth, will probably actually some bit of slowdown. But having said that, I think the whole economy actually become, in some sense, the only economy, as we normally call it, as a parallel economy. The parallel economy gets actually is demoralized, and then comes actually the main economy. The logically actually should benefit to the consumer at large.
So what's been remarkable during this phase is the fact that the inflows that are coming into mutual funds, they're actually at record levels. For November, we've seen, 9,000 crores come in, and that's one of the best months so far this calendar year.
Yeah, that's right.
What's driving this? What's changing?
I think one of the things that has happened, good for the mutual fund industries, which I would say a fundamental behavioral change that has come on the way the investors have been investing in mutual funds. Earlier, the people used to try to time the market. Whereas in the last 3 years, that whole trend has been changed more towards SIP. Which is nothing but, instead of timing the market, you make your investment through an asset allocation model and invest in equity. And if you look at that, 9,000 crores at the number what he talked about in the month of November, I would assume almost about 40% of the money or 50% of the money comes in the form of an SIP investment.
That's fantastic.
Basically, people have been investing continuously in the form of a monthly recurring investment, say signed up for say 3 years or 5 years period. That trend has been rising. Second is, there used to be a question which all of us used to answer, the pre-2008 period, that whenever the market used to fall, that one common question used to
redemptions.
come.
Are you facing any redemptions?
Correct.
Yes.
The common question used to come from anybody, and all of us used to answer the question is not a time to redeem, it is time to actually invest money.
Correct.
And today, such kind of calls have reduced, which again means that maturity level of investors, I would assume, have gone up quite significantly, having seen a very good experience for the last not just 3 years or 5 years, for the last 20 years period. I think if you look back on the equity mutual fund schemes, the experience of the investors all these years have been reasonably good, either in the form of a fund performance or in the form of performance of their investments vis-a-vis the Sensex and a Nifty. And Indian fund managers have done actually far better job in managing the money of these investors. At the same time, fixed income as a space. I think most of the time, large pool of Indian savers are sticking to the investments in fixed deposit of the bank. There is absolutely no doubt in that. I think all of them have to make investments in fixed deposit, and it's an easy way to invest. And you also know actually what is the return that you are getting in. We also been seeing a shift from the investors' behavior that mutual fund fixed income scheme also can be looked at as part of one of the...
that's something that I really want to take up with you, because that's a query that we've been getting increasingly. People want to look at options beyond fixed deposits because they realize that after inflation and tax, you're basically left with nothing in hand. But before we get to fixed income, just a quick question on the expectations. Now, as a lot of these deposits are shifting back in banks, would you expect a lot of this money to come to mutual funds? Because this money will look for certain, parking avenues, right? So in terms of just different asset classes, real estate, equity, fixed income, where do you think this money is going to flow?
I think the way one has to look at is large pool of money that has come into the banking system. I would assume some of the money will move back to the system. At the end of the day, people would draw cash and for their day-to-day running operations and so on and so forth. Therefore, that assumption one has to make. Some of the money, of course, will stay in the banking systems and move to the fixed deposit, because not all money will come to the capital market. and close to about 3 to 4 lakh crore, what are the 16 lakh crores, would also come to the mutual fund. And which in our belief is that most of those money, I think, will come to the mutual fund fixed income space first.
Okay.
These are the investors who are never bothered about earning money out of this. And that essentially means, I would assume, large pool of investors, they are conservative when it comes to the question of earning on that. At the same time, they are aggressive when it comes to the question of not giving, say, tax on that.
Yeah.
And at the same time, this money actually are chasing at the real estate assets. So I would assume that now that this money has come into the main channel in the banking system, and that money again going back to the real estate, probably the questions will be no, the answer will be no.
Okay.
At the same time, this money actually could go into the mutual fund fixed income space.
Okay, so what we're going to do is we'll take a break on that note, and on the other side we will discuss exactly this. What sort of a mutual fund do you actually need to be in the present environment, whether it's equity you're looking at or fixed income? We'll have that question answered on the other side of the break.